the Overman Warrior Podcast.
Hi, Rich Hoffman here. I don't think it's a controversial subject at all, but apparently a lot of people are pretty mad at me for bringing it up. And I say it's because they work in the public sector, work for government, and government work depends on tax revenue completely to sustain itself. And when you talk about taxes, it violates what they built their life around as far as income. But the problem is the income tax proposal, 1913, that was a huge mistake, has turned out to be a major impediment to continued growth. And when President Trump, during his exile in between terms, put the forward to this book, Taxes Have Consequences, his tax policy coming into his second term was very much in line with reality. And it's what we've learned since 1913. It's 2026 now. So a century of really bad tax policy and human behavior and how you run a government or how you run a country. And you don't want an economy built on government work that requires socialist collective endeavor of financing the whole thing through various taxes, because you're penalizing the growth that you're trying to promote, and then assuming that some administrative state can sustain that level of growth, and it's not. It's a risk rewards kind of thing. You have to inspire risk takers to go out and do things and not penalize them for doing big things, and then the wins produce all your economic engine. And it's a pure capitalist point of view. When all that centralized banking nonsense with the creation of the Federal Reserve and the income tax proposal came about, there was a lot of socialism, Marxism theory involved in that, and there was ultimately a globalist push there. Nothing sustains markets better for centralized bankers than everybody playing by the same exact rules. And you don't want one country thriving through capitalism while a bunch of other countries are choking on socialism. So there's a lot of wrong that started tax policy in the United States, starting with that 1913 proposal. So one thing that's very interesting about this book, Taxes Have Consequences, there's a lot about it. I've talked a lot about it, and it's made a lot of people mad that I have, apparently. Because they built their whole lives around the idea that you could perpetually take from people through taxation and grow a society, and that just hasn't been the case. And one element about this book that is really revealing as it goes on for lots of chapters, talking about tax behavior and how it penalizes growth. And the debate is, should people who are high income earners be penalized disproportionately because they have more money than other people? And then should they be then funding everything that Democrats want to build? This is the problem you have in New York right now with openly socialist policies pushing people out. People moved out of California into Texas because of this very kind of policy. This idea that looms in the background that you build your society around acquisition of assets from the rich. Well, but when you look at tax policies and when they say the rich get richer, it's because once you've acquired finances, you can afford to play the game differently than people who don't have means like that. And there's a lot of tax loopholes that you can use to get out of paying higher taxes. And should the rich be allowed or even be promoted to do so? So one of the problems with talking about wealthy people and using government to gain wealth, and Nancy Pelosi comes to mind, and lots of people like her who certainly have benefited from public office, and they've greatly increase their bank accounts while they served in public office for a whole lot of reasons that are disingenuous at best. Those people shouldn't be lecturing anybody about how to maintain wealth. When you work hard, you go out, you earn money, and you have assets. It doesn't mean that people who didn't work hard have a right to steal that wealth. And that's the whole proposal behind the income tax system that was proposed when the Federal Reserve was brought in. It's a centralized bank scheme to fund an administrative state that serves their stability in financial markets. And that's not a good policy. And should the rich be allowed to use tax loopholes to get out of paying their fair share? So the fair share, of course, is then determined by Marxist ideas, socialist policies, and fair share is assuming that people who gain from the system owe the system something so other people can benefit from it. So I had to explain to some people, some younger people the other day, the basics of economics, and they were upset that they didn't make much money. They didn't make enough. And you watch their lifestyles, and my statement to them was, well, what are you doing to make more money? Because if you don't have enough, go work more to make more. I mean, it's a free country. You're free to. You don't have some king telling you, well, you will maximize your income at $20,000 a year, and then you got to live within that means. Now, in a free country, if you want to buy a new car, you work harder and buy a new car. If you want to buy a new apartment or a house, you can do all that. You have 24 hours in a day, 7 days a week. Do the most you can with it. And people who do various things, they take risks, and sometimes those risks pay off, and they become rich in the process of doing so. And then they have more tools to make more money with more hours on the clock than people who aren't using money to make more money and doing more great things in the world. Once you start getting the engine going, you can do a whole lot with a little bit of money. But you have to get a little bit of money before you can do anything. So you want those people to not sit around playing video games all day, or not sit around complaining about something in their life. You want them getting out there and working at some fast food restaurant, or stocking shelves at Walmart, or doing whatever you have to do to earn a few more bucks so you can have more bucks to play with. And then with what you play with that money might make you rich in the process. And those who have been made rich, you want to accelerate more growth in that way. You don't want to penalize them. And so the progressive tax proposals that were put forth, that are talked about in this fabulous book, Taxes Have Consequences, is exactly that. 100 years of tax policy, 1913 was a mistake, and we have to completely rethink the whole process, because when you gain money, you don't want some parasites coming along and stealing it. And government workers are essentially parasites, especially if they're not helping contribute to expanding society. If they're just pushing papers around and being paid 30% more than everybody else because they're in a government job, because there's no oversight, because it's all confiscated wealth, everything built off government, it's built on debt and taxes. And neither one of those things is good for a productive society. And then when people do gain a lot of wealth, they use their money to shield the administrative state from stealing more of it. So they take advantage of tax policies that give them loopholes to get out of having to pay the level of tax that the administrative state thinks is possible or should be happening, for which they say is their fair share, determined by Democrat politics. So Democrats go out and spend a lot of money on a bunch of crazy stuff, hoping that they can stay in power because they gave away a bunch of free stuff. And then they expect risk takers and people who have gained wealth over the years to pay for it. And they call that the fair share. And people who have obtained money obviously don't want to just throw it away because they earn money, they gain money for a reason. They were probably a little smarter than the average bear. And that's how they end up with money to begin with, because they worked hard to get it, and then they work hard to keep it as much as they can of it, not to give it away to a bunch of handouts and parasites. And that's essentially what our tax policy and what they did with the 1913 income tax and the creation of the Federal Reserve was a wealth confiscation scheme. America was doing well. Capitalism was making a lot of people very rich, and this income tax said, I want to come along and steal from that. This great system of America built a bunch of wealthy people, and now they have to pay their fair share to build this administrative utopia that we fantasized about, which stabilized the financial markets. And none of that turned out to be true. And you have to go back and completely rethink the tax policies from the outset, because it has not been successful. And those who did gain a lot of wealth through taxes, through wealth creation from the United States and the free market system that enabled that wealth creation, they used the same ingenuity to get out of paying more taxes. And the book that I referred to goes on for pages and pages and pages of talking about statistical behavior psychologically from people who obtain wealth who look to get out of paying all those taxes. And going back to the Nancy Pelosi example, when you have all these people in Congress who are obviously getting very wealthy from their access to knowledge as congressional people or as senators, and you have the ability to make investment decisions based on the trends you hear about on Capitol Hill. That's about as easy of money as it gets, and that's not great wealth creation. That's parasitic behavior. And when those same people make decisions that want to confiscate more wealth to create more of a shell game that makes it easier for them to participate in that shell game, you can't expect people willingly to sign up for it, because there's been a lack of trust established. And that started right out of the gate. There is 20, 30 years of established socialism in the United States, going up to the Red Decade. The only thing that really kind of broke it up was World War II. And the mass manufacturing that went on to kind of shake everybody out of that Red Decade, the push for communism, socialism that was global, and certainly led by the financial institutions, and it was certainly wrapped up in this 1913 idea of income tax. The way that you fund a government is you do good things, and people pay for that service, and you pay for in taxes on your use, whether it's a highway or some transaction. You pay the sales tax on the transaction for the infrastructure that you're using. And the more economic growth you have, the more money you make and have to work with as a country. And that was certainly coming into the second term with Trump's tax policies embodied, and he still leans in that direction. You only get higher tax revenue through growth, not through penalizing the rich. Not from making them pay their fair share, because they're going to pay for lawyers to come up with loopholes to get them out on how to pay so much high tax. Because you didn't get a lot of money because you threw it away. And when you do work hard to go get it, then you're going to obviously want to protect it and keep it. And it's just like the people I was talking about that were complaining they didn't have enough money. Well, they weren't working enough. You spend too much time, and if you're wasting your time during the day playing a bunch of video games and not doing productive behavior that pays you money, no wonder you don't have enough money. But then you don't encourage people to go out and become people who are more productive if you're penalizing them for doing so. They're just going to sit around and play the video game because they're getting killed on taxes. And when you tax and penalize ambition and growth, of course you're going to have a depleted society. And that's the lesson behind taxes have consequences. They certainly do. They hurt the economy because they keep people from wanting to participate. And when you steal the money that they work hard to go get, of course, and then pay a bunch of derelicts to sit around in some cubicle somewhere and push paper from 9 to 5 or 8 to 4 or whatever it is. One thing that's interesting about Washington, D.C., I was just recently there, and the parking garages are always full at 8 o'clock in the morning. It's hard to get in, hard to find a parking spot. But if you go back at noon, go back at lunch, almost half the parking garages are empty because people are only working half a day. And most of that's government work. They do not work very hard. It's like that even in Hamilton. It's always busy in the morning. By afternoon, it's over with. And that's because these people are being paid a lot of money to do very little work, and it's paid for largely by taxpayer funds. And people who earn a lot of money don't want that money stolen and given away and thrown away to a bunch of parasites. And that's what government work essentially became. It's not productive work. It's not wealth-generating work. It's just parasitic work. It's make jobs And then Democrats make those jobs, fund those jobs with stolen money, and then expect the rich to continue to pay for it. And when they find loopholes to get out of paying that fair share as they determine it, they're upset about it. But that's it's a human behavior trait that Democrats are not aligned with. And the income tax proposal, 1913, was not productive at all. It needs to be repealed and thrown out. And so, as the Federal Reserve, turned out to be a devastating consequence of money management and protection of the dollar in the United States. And as we evaluate fiscal policy, you have to look at taxes and say, why don't people want to pay them? Well, because you're paying for people who don't want to work. You're paying for people who have easy lives, and you're trying to give them high incomes paid for by government through confiscated wealth. And it was a dumb idea from the outset, and it's even a dumber idea in 2026. And now you have a century of statistics to talk about it, which is what they talk about, and taxes have consequences. It's not some scandalous thing to talk about. It's human behavior, and humans don't want to pay for other people to be lazy when they work their tail off to get a little bit of wealth in life. And then once they do get a little bit, they're not going to give it away for a bunch of easy parasites to steal from them, so they can build something of very little value. That's not practical, rational, or even sane. And that's why tax policies need to be relooked at, and the way we penalize people with taxation through incremental increases. The more you make, the more you pay is completely ridiculous, and needs to be completely rethought. And it will. And people who have become addicted to that system obviously are upset about the discussion, but you can't put the genie back in the bottle, because now we have, it's one thing going forward and saying, hey, let's do this income tax thing in 1913. It's another thing looking back from 2026 and on, back at those years and saying we could have done a lot better if we hadn't had this stupid incremental income tax, this progressive tax system that fed this monster behemoth for which nobody values or likes, except for the people who work there and make easy money doing it. It's not something we want to perpetuate going into the future. And it's on the chopping block, all these taxes, because people don't want to pay for them. They don't want the government that it does pay for. And that's what's going to become the next 10 years discussion. And a lot of people who are trying to keep that from happening are upset that bring it up, but that's not going to change the nature of what human beings are. Human beings do not want to pay for other people to live easy lives off their work and ingenuity. And that's never going to change. That's human beings at their core, and you have to build a society that reflects what people really truly want in a representative government. And you can't maintain power to keep the whole scheme going through election fraud either, which is another aspect of why everybody's against the SAVE Act, the Democrats, because they want to keep this thing going, and they don't want true representative government because they know what that means. They're not going to be able to keep this progressive tax system thing going so they can make big government jobs that don't require a lot of hard work to perform. They're not going to be able to keep that whole thing going in the charade that it has for all these years, because they know what human sentiment really truly believes. And that is only increasing as the days go by in 2026, going into 2030. People are done paying high taxes for services they don't value. And not talking about it, trying to scare people off from talking about it, isn't going to change the fact that that's just the way humans are. And the progressive tax system was a gamble that big government types and centralized bankers thought would work because they didn't truly understand human psychology, and that's on them. That was their fault for buying hook, line, and sinker into that whole socialist, Marxist, communist scheme. And now their dreams are falling apart, and taxation is going to be completely rethought, and it's not going to work the way that they thought it would, and they're going to have to go out there and earn a decent income like anybody else, and they can't rely on the power of big government to steal confiscated wealth and give it to them just for showing up and rolling out of bed every day. They're going to have to actually do things to earn that money, and they don't like it. And that's going to become a growing trend. Anyways, Rich Hoffman here. Share, subscribe, make tomorrow a better day. If you haven't read my book, The Gunfighter's Guide to Business, I think you'll love it. Anyway, have a good day. See you later.
Thank you for listening. Coming soon, the politics of heaven.